Really important thing, what I think has happened, and it took me too long to realize this, I'm annoyed at myself, is that the Federal Reserve and all the central banks took away left tail risk. What did they do? Debase the currency. What did it do? Optically make asset prices rise, so the collateral went up. So what they've said is, you cannot have a debt deflation. We will not allow it. And we will debase the currency by 8% a year to pay for it. So if we've taken away the left tail and everything is correlated on this debt refi cycle, and they have to debase currency over time to do it, well, this may well be the best macro risk-taking opportunity of all time.
Raoul, a renowned macro analyst and commentator, offers a unique and optimistic perspective on the digital assets space and the current macroeconomic climate. Unlike many other analysts and financial experts who predict a looming financial apocalypse due to the swift devaluation of fiat currencies, Pal challenges this pervasive pessimism. Advocates of sound money have repeatedly warned of an imminent collapse that could render even strong currencies like the US dollar virtually worthless. In stark contrast, Pal, a former Goldman Sachs executive, remains a dissenting voice. He argues that the global economy has a viable path forward, hinging on two critical factors: productivity and demographics. Both factors have stagnated in the developed world for over a decade, stifling potential economic expansion and the increase in consumption necessary to support additional debt. Nevertheless, Pal asserts that taking on more debt remains the only feasible solution to stimulate the global economy. Unlike sound money advocates who see global collapse as inevitable, Pal believes a sustainable path forward exists for both the United States and the global economy at large. In a recent discussion with Blockworks Macro, Pal shared his insights on the evolving macroeconomic landscape, describing what he calls the big picture and the natural progression of the current debt-based system into the exponential age. He envisions a future where high-tech innovations, such as AI and robotics, are created at dazzling speeds, transforming every aspect of our lives. By around 2030, when this era fully blooms, Pal estimates that concerns about debt or GDP will be irrelevant, as these innovations will infinitely scale human abilities and exponentially increase productivity.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
What we're using all the available GDP to service the private sector debts. So the private sector is about 100% of GDP in debt. GDP, and let's say interest rates on average have been about 2%, and trend rate of GDP growth in the US is 1.75%. So basically, all of the new business of the economy is servicing debts. So the government's 100% of GDP in debt. So where does that go? Well, that gets monetized. So the only way with an aging population, so GDP growth is driven by a magic formula. It's really simple, and every economist forgets it just in the mid-curving of being an economist. It's like GDP growth is driven by population growth plus productivity growth plus debt growth. Debt growth is robbing from the future. We blew that up in 2008. All debt growth now is just servicing of old debts. So population growth, productivity growth. Population growth, well, you can extrapolate that into the future. There is no population growth in the Western world. It is just shrinking and shrinking and shrinking. We've got a demographic time bomb that we know. Okay, so how do we get GDP when it gets worse and worse and worse every year? Productivity has been terrible too. Why? Because old people aren't very productive. No shit. It's not difficult to figure this out. And then you peer into the future and say, okay, how do we stop this dynamic? Because if this continues, this whole thing continues in this weird world of debasement and cycles and all of that. And really, it's about technology. It's about the AI and the robots are infinite population. People don't get it yet, but like Amazon has gone from 250,000 robots in 3 years to 750,000 robots. Soon it'll be got past the workforce of Amazon itself in human terms, and these things are 3 to 10 times more productive. So we are replacing an aging human workforce with infinite AI and robots. So what that does is makes a mockery of that magic formula. What, we can have infinite population? Well, the other side of that is, okay, well, infinite robots and AI means an infinite use of electricity and compute. So compute, everybody's solving the electricity side. Well, that is productivity. And productivity, again, I love the mid-curve take of spin to it. It's like the Europeans have no fucking clue what they're doing. They're throwing money at this stupid green energy narrative. They completely understand what they are doing is forcing down the cost of capital into innovation in lowering the cost of electricity. Because fossil fuels, over the years, basically, electricity costs have been stable. We haven't really made much progress with that. But we've seen the Moore's law working in EV and solar and in wind and in geothermal and eventually in nuclear. We've got more than enough energy. It just takes time and investment in technology for storage and distribution and all of that. So the Europeans are pouring money in. People don't realize the Chinese have been doing even more. The Chinese, 40% of their entire car fleet is now electric. And so they're all forcing down the cost of energy. So think of the magic formula. You're about to increase population infinitely, and you're about to, over the next 10 years, drop the cost of electricity by 75%. That multiplier is bananas. That you don't need anything else to solve this. Now, we had the same situation in the 1950s, coming out of World War II. We had the crash of 29, which was basically 2008. World War II, let's use the pandemic. Everybody comes back into the workforce. We get the inflation, all of that story. But really what they did was yield curve control and then let productivity pick it up. Now, they didn't need the robots because what do they have? They had the baby boom generation.
Yeah.
They all got born in 1950. It's like us, but birthing the robots now, right? And the AI, it's the same thing. It was like a 30% increase in the global population happened. Well, no shit. It all worked out because GDP picked up, productivity picked up, and the world was solved. We're going to do exactly the same rule book now.
Raoul predicts that innovations such as AI, AGI, robotics, and others will have a transformative impact on the global economy, similar to the effect of the massive baby boomer generation after World War II. According to the Real Vision CEO and founder, this transformation is already underway and should be fully functional by 2030. Until then, Powell believes central banks will have no choice but to continue printing money, accumulating more debt, and debasing their currencies to lower the denominator against asset prices. This scenario, he asserts, creates the greatest macro opportunity in history. Powell explains that the continuous printing and debasement of fiat currencies will lead to higher asset prices. He emphasizes that only two asset classes, crypto and tech, have consistently outperformed this debasement, with crypto being the far more lucrative option. As a result, Powell declares that diversification is dead. He argues that neither debt, currency debasement, nor market cycles matter. Instead, investors should focus on the asset class that outperforms currency debasement and anticipate the inevitable boom from about $2 trillion today to $100 trillion by 2030. In the interview, Powell delves further into macroeconomic trends and what he calls the banana zone, offering insights on how to navigate severe market declines. He emphasizes that investing in assets that can withstand currency debasement is the key to thriving in the current and future economic landscape.
The alternative that FinTwit would love to scream to you about is they should get out of the way and let it all burn. Nobody has a comprehension of that mean. When the world is 350% of GDP in debt, what exactly does that mean? Does that mean we go back to the dark ages? Does that mean we break all global trade? Nobody's going to do that. And I kind of understand. If there's an 8% cost of not doing that, I'll take that. Using the everything code, I know where to invest and I can offset that cost, and that's fine.
We've mentioned this whole bit of banana zone, I think, a couple times. I would love for you to just explain that for those that may not know what we're talking about, and then how that relates to where you think we are right now in terms of price, cycle, etc.
So Julian Battelle and myself kind of used the term actually for last quarter last year. We said, hey, listen, liquidity's picking up. The pre-election cycle, it usually goes bananas. And then so we called it banana zone. It was the front cover of Global Macro Investor was banana zone. And then we started realizing, you know what, the macro summer and macro fall or autumn, that's the massive banana zone. And then you see that beautiful chart of Bitcoin every cycle and it goes vertical. And you're like, well, it just looks like a banana. And the banana zone says everything. It goes bananas. It looks like a banana. It's funny because it's kind of phallic. It's memeable. And so, but as I said, that is the banana is the big yellow candle of our hopes and dreams is all carried into that. And that's the liquidity cycle, the everything code cycle. If you want to use the Bitcoin halving cycle, which I don't really do, but it's all the same thing. It's all there. And this is the point. And it's all held in that yellow fruit. Change your mindset to look forward to sell-offs. Think, okay, somebody's given you a wealth compounding machine and you get to have a go back. You know, let's say Bitcoin price goes to 200,000 and it comes back down to 70,000. You get to have another go again. That's a gift. I mean, Anson put it on Twitter and he's dead right. It's like, I cannot believe they give us this gift every 4 years where it becomes the worst performing asset and we get to make another 20, 30, 40x. And so if you use that mindset to say, hey, I'm in this for the long run. I'm going to stay in this trend probably for the rest of my investing life. I'll take money off and I'll do the normal things, but this is my investing journey now, like you do with your 401k or whatever it is, then you should be very excited and thinking, how do I hoard as much cash as possible in 2025? So in 2026, you can play Chris Boniski on the internet, which is, he got it dead right. He'd hoarded cash and nailed it. And, I was still scrambling around adding. I mean, I luckily added all the way through, but I didn't have a big cash pile to do it with. I wish I had. Now, people might say, yeah, but that's why you sell out of the top. Don't do that. You can sell some out. But the thing is just buy the discounted prices if you get them, when you get them. And then you don't have to worry about nailing the low because you haven't got the money in the market, all sorts of weird stuff that happens. So it's basically not fearing things. It's looking forward to things. If you face your fear and actually turn it into your friend, it doesn't become a fear anymore. It's a psychological trick that works for every single thing in life. Most people live with their fears. They lie in bed thinking, fuck, am I going to make as much money as I want? Is the banana going to happen? And then am I going to lose it all? Okay, because they're thinking too short term. They're not thinking what it could be. They're not thinking about, okay, how do I de-risk it so I don't have to have these thoughts in the middle of the night? That monkey brain can go to sleep. And how can I get excited about the sell-off? Change that. You've changed everything.
There are several compelling examples that support Raoul Pal's assertion that boosting productivity and fostering economic growth can help manage the burden of debt, allowing for continued periodic money printing. One frequently cited example by macro analysts like Pal and Len Alden is the impact of globalization efforts during the early 1980s, when the United States national debt first became a major public concern. On October 22, 1981, the national debt reached $1 trillion, sparking significant public worry unlike today. During the 1980s and 90s, known as the decades of globalization, technological advancements that streamlined international transactions played a pivotal role in addressing this debt issue. According to the International Monetary Fund, globalization gained prominence during the 1980s, coinciding with China's adoption of the open door policy that invited foreign businesses into the country. These developments enabled the United States to defer its debt problem for another 40 years. Powell suggests that if the artificial intelligence revolution unfolds as he anticipates, it could usher in another 40 or 50 years of progress, potentially averting the economic collapse that many fear. What are your thoughts on the insights shared in this discussion? Do you believe AI and other rapidly evolving technological innovations can effectively address the world's significant debt issues? Share your thoughts, comments, and observations in the comment section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.